Stock Charts Live. And what we're looking at is the bloodbath that is Snapchat in the after hours session. So what we're going to do is we're going to talk about Snapchat's earnings. We'll talk about the impact of those earnings on other social media stocks. And we will also talk about the Federal Reserve's balance sheet. We will talk about a few headlines, not much. And we're going to go over the weekly charts. How are we poised to close out the week? And what do the weekly charts tell us about where we're heading next week? So stick around to the end, and we will be taking stock chart requests. So for those that are new, please click like, subscribe. If you're new to technical analysis, use the link below. Get my 5-part video tutorial on my top 5 favorite candlestick patterns. What else? We're sponsored by TrendSpider, 35% discount code. I'll be demoing them in a moment. What else? I think that's it. Let's go. Okay. So in the after hours session, Snapchat has reported earnings, and they closed out the session at $16.35. And we are currently down with a very low 12 handle. We went as low as $11.80. That was historical support. I'm going to go to the chart in a moment showing that historical support. Does it hold here? I highly doubt it. I think we move lower. And we're going to talk about price targets on Snapchat. Again, stick around and we'll go over that in a little while. And please, if you agree, disagree, leave a comment. Sorry, folks. I got to eat something salty. Beef jerky. Signature Series beef jerky from MichiganBrand.net. Really, really good stuff. No carbs, very low in fat. But man, the sodium is crazy. So really good stuff if you like beef jerky. And it was an odd lot. Very, very cheap too. All right. See the value that you get here? The value. So click, like, subscribe, comment, share with a friend. Let's take a look at how Meta, Facebook is doing in light of these earnings. They have yet to report. Pardon me. Oh, they're getting hammered as well. They close it 183.17. They had the same positive initial knee-jerk reaction to Snap's earnings, meaning they moved up higher, and then bearish key reversal. Not much volume going on here at these levels. It looks like we have bottomed out, but tomorrow morning, you're probably going to see institutional selling tomorrow morning. You don't get all that much of it in the after hours session because spreads are too wide unless they really need to get out. But tomorrow morning, unleash the dogs of hell on at least Snapchat and probably Meta as well. Let's go back to Snap, see what kind of volume is going on there, what kind of action. Yeah, we're sticking at this low 12 handle on. Sorry, I drink that water too fast. I'm very fragile today. Very fragile. Yeah. They're pinning it to 12. Right at historical support. Just off of it. Okay. Let's bring up Google. That's getting hit as well. They close at 115 per share, down to 112. Let's go to Google with a L. They close at 114.30. They're getting hit even harder than GOG. Twitter reports tomorrow morning. There was an anticipated $1 move in the share price. Let's validate that. They moved it up to $1.70. What's the implied volatility rank? Oh, I would never trade this. 27% implied volatility rank. There's no premium out there. I think the only way to trade Twitter is with a long spread. The options are cheap going into earnings. Normally, you'd want to see 75% implied volatility to 100, 102% implied volatility. These options, they're not expecting much of a move here whatsoever. So clearly, the bet is to have purchased options at the money, straddle, ideally, and those expiring tomorrow. And maybe you get a big move one direction or the other to compensate you, because you're not going to get much in terms of an implied volatility crush tomorrow. And you didn't get that with Tesla. I didn't trade Tesla on earnings last night because the options were inexpensive. Again, they should have been up at 75, 100% implied volatility going into earnings. They were at 53. I said, no, I'm passing. So we did not trade Tesla on earnings. What else do we want to talk about here? I think we're good. So let's leave off with how the NASDAQ futures are trading in the after hours. They're down over 0.75 of a percentage point. This is probably going to carry through to tomorrow morning. The question is, do we take out the lows of today? Okay, let's see what yields are doing. Bond yields continue to press lower. This is recession here. Lower left pane is the 10-year Treasury bond at the lows of the session. The dollar weak trying to put up a fight here. VIX rising. VIX is rising. Here's a 4-hour chart of Snapchat above. Bloodbath. Absolute and utter bloodbath. But we're going to talk about where I think this thing settles out pretty soon. Let's go to comments. All right. Yoga Mac. Welcome, sir. It's a perverse world, Bob. Jobless claims horrible, and the market still pumps up. Yeah. As sick and perverse as it is, bad news is good news for Wall Street. Franklin, welcome, my friend. Bruce Springsteen 2023 U.S. tour starts February the 1st. Floor seats going to $4,000. So much for being the common man. We're in the wrong game, Bob. You know what? People ask me to sing, but they ask me to sing the song Far, Far Away. So I don't know what they mean. I think that's a knock on me, but I think I have a pretty good voice, at least in the shower. Bullish on Contrarian. Smash the thumbs up and subscribe, folks. Yes, please smash, subscribe, like, comment, share with a friend, unsubscribe, do something. It helps me out with the YouTube algorithm. A jerky is not from China. No, it's not. It's not. I actually went on their website last night. I'm going to see if I can get a white label product made. No, they're on Highlandstrasse. It doesn't say road or street. It's 320 Highlandstrasse, Frankenmuth, Michigan. That's all American, but probably of German heritage. But that's good enough for us. We like it. And U.S. inspected. I don't know what that means nowadays. As long as it's not the CDC. Very fragile. Yeah, I am fragile today, yes. But it's been a good week, a profitable trading week. Jeff, hello, my friend. Chuck, welcome. Haven't seen you in a while. Good to have you here. Pete, good to have you as always. All right. Let's get to it. We're going to go over Snapchat in a little while. Let's talk about the markets. So, we did some buying. IBM. I think IBM got thrown out with the baby after earnings. They had good earnings. For whatever reason, they're getting beat up. But I thought it was an opportunity. We bought some IBM. Monthly chart looking fairly good on a multi-month, multi-year basis. Obviously, this month it's not looking good. But on a relative basis, relative to the S&P 500, it certainly looks a lot better than the S&P 500. So am I ready to go buying equities here? No. IBM's trading with a PE of 15. Where's the market trading at current? The S&P 500, we're back at 30 on the Schiller PE ratio. So while if I were in my 20s, early 30s, would I still be dollar cost averaging here? Absolutely. No doubt about it. Still dollar cost averaging. You got many, many years to go. But in my very, very youthful age bracket at current, I put this gray in my hair to make me look distinguished. Not that it's working. I look for opportunities to speculate, and that's how we grow wealth at this age. And we have our core portfolio, and we add to it as necessary, but we like to speculate. That's what we do. And that speculation in equity options and options on commodities has treated us very, very well since April of 2021. We are killing it. And we've had our bumps in the road. Netflix earnings for not this quarter. We did very, very well this quarter on earnings, but the past 2 quarters, I got to say, it took a few days off my life, those earnings reports. So most of the time, we're very, very consistent with our profitability. We book profits this week on, what do we book profits on? Netflix, Lockheed Martin. What else do we trade? Netflix, there's Lockheed Martin. We traded that a bunch of times. IBM. We did. Oh no, we didn't trade earnings on. We didn't get filled on IBM. Options were too cheap. LMT though, we did get filled. We rolled those trades down and up, and we created a straddle. We booked profits on that straddle, and then we rolled out to a strangle expiring tomorrow. We sold puts on NUGT. Now we're kind of doing that on a weekly basis lately. So a really good week so far for our options trading portfolio. In terms of economic data, well, not much going on. Tomorrow we're going to get U.S. manufacturing PMI. That's the Purchasing Managers Index. Watch for a read down below 50. You want to see something that's going to salvage the market tomorrow. If we get a read at 50 or below, that is a sign of borderline contraction. A read below 50 is contraction in manufacturing. The same holds true for PMI services. So we are very, very close to that neutral level on these reports. So keep a close eye on this. It can move the market, especially if we go negative. The knee-jerk reaction will probably be down, but in all probability, the markets will shrug off the bad news. Why? As Yoga Max said earlier, as sick as and perverse as it is, bad news is good news. And the expectation of the market will be that the Federal Reserve cannot be as hawkish on yields as they want to be or profess to be. And I don't need to talk much more about this fact that the market is absolutely right, because I have the evidence at my disposal, and it's right here. Here's the Federal Reserve's balance sheet. This is as of yesterday, but printed after the bell today. And the Fed's balance sheet rose versus last week, which rose versus the prior week. They are supposed to be rolling off $35 billion worth of debt in the month of July, another $65 billion in August. They haven't even begun, folks. This is a slap in the face. They are not fighting inflation. They are continuing with printing money and buying up all the debt that the Congress can possibly spend. So, buckle up, man. Am I going to buy equities when we have a Federal Reserve that is spitting in the face of inflation? No way. Will equities continue up higher? Yeah, they probably will in the short term. But where we're looking right now is towards, and I know I've said this quite a bit, but towards the gold mining stocks, gold stocks. Why? Because the ECB today raised rates by, I think it was a half basis point move up higher. Not much. First rate hike in 11 years. Think about it. Think about it. Now, initially, the euro rallied pretty strong, but then it reversed. Let's see how it finished out the day. Let's go to a daily chart first. And this all has to do with the gold mining stocks. Don't get bored to tears with what I'm talking about here. I have a method to my madness. So we did reverse, actually, to close just off the highs of the session. Let's go to a 30-minute chart. Ooh. So, folks, not familiar with TrendSpider, automated trend lines. I did not draw this breakout point. What breakout point am I talking about? The one you can't see now and the one you can see now. We broke out. Euro is going up higher, at least in the short term. On a daily time frame, I think we're flagging out here. We're probably going to move up higher. Again, we have resistance immediately above. How do I know? Automated trend lines, folks. Right here. That's the algorithm at work. 35% discount code TrendSpider. Boom. Big time saver. So up at 94.87, we're going to have resistance on the euro. I think the dollar is quite possibly going to break. We're going to go over to the weekly chart of the dollar in a few moments when we go to the weekly charts of the rest of the market as well, and including the bond market, which flashed, the bond yields flashed an outside reversal bar today. So we are, in all probability, going into recession. The dollar is going to come in. Inflation will continue to rise, albeit probably going to slow in its rate of change. But what does that mean for gold stocks? Well, if the dollar pulls back, yields pull back, inflation continues to rise, and the economy continues to contract, it's like an algae bloom, the perfect petri dish for gold stocks. Let's go to comments. Yoga Mac. Bob, I made profits on SPY puts Monday and SPY calls on Tuesday. Congratulations. Then I went back in on the puts. I wasn't patient enough. Think about that. Hey, you can't be perfect all the time. It's our business. It's an imperfect business, and anybody striving for perfection, they don't last. I saw Apple and T-Mobile were teaming up for rollout on some products. Okay. Yep, Pete. I think we just proved that. Burr. Yep, definitely. Falcon. Hey, brother. Bob, I know you didn't like CMA Carvana, but I ruthlessly went with my gut. And how did that pay off? If I'm wrong, I was wrong. Let me see. I think this was a couple of weeks ago. We spoke about this. It looks good now on a daily chart. You're going to have resistance above at 1371. Where did we close today? What did I say? 1371? That's wrong. 3171. We closed at 2821. So the chart has improved dramatically since we last spoke about it. Just keep in mind, Falcon, that you have still weekly time frame. Again, I'm going to take the trend lines off, put them back on. We're right at resistance. What I'll do is this. Create an alert. You hear that dog in the background? That is my little mini Aussie, the perfect lady, Mina. Very pretty and lovely lady. Okay. So, opinions change. And now it's beginning to firm up a little bit. The daily chart looks bullish. Weekly chart still got resistance above. We need to break out on a weekly chart before I can put money to work, because obviously this is still in a downtrend. We have futures that are trending down right now. Let's wait and see how the week closes out. If it breaks out, different story. My tune changes. Bob, what does it mean when China is selling U.S. Treasuries? They have no confidence in us anymore. I think that they're at the lowest level of Treasury holdings since 2010, something like that. No, it's not a good thing because it means that the Fed needs to take up the slack. So if there are no buyers of last resort out there, the Federal Reserve has to be the buyer of last resort, and we're on the hook for those Treasuries. So it's not a good thing. It's definitely not a good thing. Falcon Gut. It is doing quite well for me. Which, okay, good. I'm glad you're doing well with it. Bob, reminder: the car repo numbers were at 17%. Is that rising? I believe it is rising, Franklin. If you could share that report, that would be great. I'll bring it up on the live stream. Falcon, I bought 6,000 shares at a double bottom, 1970. You bought 6,000 shares at 1979. Nice job. Awesome job. William, hey, sir. Hey, Bob, how hot is it on Long Island? It was really hot at around noon. Then we got hit with a big rainstorm. It cooled off. Now it heated back up again. I can't bring it up. Probably about high 80s right now. It's really nice out. Yesterday was super hot. All right. So initial jobless claims. We spoke about this earlier a little bit, but bad news is good news for the market. And the number of Americans filing for first-time unemployment claims soared to an 8-month high last week. Where do you see the highest rates of increase in unemployment? You guessed it, Massachusetts, California, surprising, South Carolina and Georgia. My state was up here last week, and they actually pulled back. So New York and New Jersey saw a decline, but they were higher last week. Why else might the market continue to rally higher? Oil continues to move lower. Why? Demand destruction. The Federal Reserve is going to point to this and saying, we succeeded. Our rate hike succeeded. They're going to claim victory, and then they're going to ramp up the printing presses yet again. And you can bet it's going to happen sooner rather than later, probably Q4 of this year, maybe just around the time of the election. That way the markets rally and people feel good about their portfolios and not wanting to vote the bums out. So get ready. It's coming back, QE. All right, so let's go over Snapchat's earnings. Snap craters 25% after reporting weakest ever growth. Removes Q3 guidance. That is never, ever good. Drags down all socials. We already went over that. Let's go over their numbers. They're down 25% after hours. Revenue. Why is this so bad? Revenue missed. They're expecting 1.11 billion. The estimate is 1.4 billion and growing just 13% year over year. I don't know what their valuation is. Let's check that out. I don't think they're making money, so there's no PE. Maybe they are. I don't know much about this company. I'm thinking aloud, which is never, ever good. Their PE ratio is 33. So this makes sense. They're going to get hammered. They're going to get rocked over the head tomorrow. Okay. Adjusted loss per share, 2 cents, 20 cents. EPS, 10 cents. That was the Oh, man, they really, really miss. Wow. That's no wonder why they got hammered so hard. I mean, the revenue wasn't that bad. I mean, yeah, you never want to see a miss on revenues of a stock that is trading with a 33 handle on PE. But looking at the miss on EPS, that is drastic. Wow. There was some good news in daily active users, which was at 347 million. That beat North American daily active users. That beat Europe. Blah, 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 blah. That beat rest of the world. That beat. Tragically in time for when tech companies are firing, but Snap still has some colorblind in-house graphic designer. Okay, I don't know what that means. All right, so I'm looking for guidance here. Oh, that's right. They remove guidance. All right, so this is going to get rocked. Let's talk about where Snapchat is probably going to land. So this is not reflecting the after hours price action. So you're going to have to use your imagination a bit. Right now, we are here, right down at lows, not seen since back here in April of 2020. Where do I think we're going on this stock? I think we're going to see a 9 handle, 979. And if that fails, we're coming down here to 812 per share. So I would not buy these shares at current. They're going to get rocked tomorrow, along with all the other social media plays. So buckle up for a rocky tomorrow morning. The only thing that's going to save this market tomorrow is a miss. Yes, a miss on global and services PMI, global services PMI, global manufacturing PMI. Look for a read at 50 or below. If you get that, look for stocks to rally, bond yields to decline. Let's go to the weekly charts. First, let's what happens when the dollar crashes? If you think inflation's bad now, we ain't seen nothing yet. We haven't seen anything. Think about how bad inflation would be if we had a weak dollar. Remember, oil is priced in US dollars. So when if oil holds a bid and the dollar rolls over, oil is just going to, in dollar terms, oil prices are going to go through the roof. They're not making money. The miss is not that big. The miss on EPS is pretty big. The on revenue is not that big. So it looks like their expenses are going through the roof. Can you explain pinning Snap at 12? What that means for tomorrow? Well, all we're doing is we're taking a look at historical price action, right? We can even bring it up here, and we'll take a different view. All right, so we'll bring it up, and we'll use a monthly chart. So all we're doing is taking a look at right about here. This is where we found a low after hours today at around $11.88. So I'm not going to make the assumption right off the bat that we're going to break the support level. At current, what we're doing is we are, as a matter of fact, now we're trading down below 12 handle. They're trying to defend it. But my guess is tomorrow morning, if in the pre-markets we continue to see a low 12 handle, especially an 11 handle, my guess is that you're going to have whatever institutional money is looking to sell, they're going to sell tomorrow morning. They're going to get out. So that's going to probably cause this support level to breach. Remember, a lot of the institutions can't go selling right here, right now, because if they were to do it, look at the spreads on Snapchat. after hours. I don't know what I really don't trade this that much on Thinkorswim. Uh, I don't know what the bid ask is. I'm sure it's pretty wide in the after hours session and pretty illiquid. So the institutions would have to take it on the chin. Let me see if I can bring this up. All right. Mm-hmm. I want to see what the spread is on the bid ask. So yeah, if anybody's out there looking to buy this dip, I would not do it. All right. So last tick was 1198. So the spreads really aren't that bad after hours. I don't know if I could drag this over. The spreads aren't that bad. They're penny wide, so it's not that bad. But good luck selling 100,000, 200,000 shares of Snap in the after hours session. So the bids out there are very, very small. The asks are twice as many as the bids. So tomorrow's not going to set up for a good open. So tight spreads, but expect a volatile session tomorrow morning. All right, let's bring this back up. When is SPI going to top out again? 399. Let's go over it. Let's talk about it. So this is Snapchat. I may look to sell some premium tomorrow on Snapchat. The implied volatility should be through the roof. Trade, what's the implied volatility at? No, that's right now. It's very, very low. They did not expect a big move on. Oh, actually, it's because I don't have the right symbol up, idiot. I told you, weak today. Very, very weak. Fragile. Mentally fragile. So the market makers expected only a $2.82 move, 83-cent move. And the IV percentile, this makes sense. It was 80%. So normally I would double this number up. I would round it up to $3 times 2, $6 move. I would not be a happy camper right now. We closed where? 635. We'd still be able to book a profit tomorrow, but there would be a lot of pressure on the puts. Those puts are going to be very expensive tomorrow. I'll probably look to sell some puts tomorrow. So members, stick around. We're probably going to throw on a trade here on Snapchat and try to scalp some of the implied volatility. I had a profound thought. Maybe we are living in a brave new clown world and there's no going back. I can't argue with you, man. It's sad. They're really think about what they're doing in Congress right now. They're voting on a bill in the House of Representatives. I didn't want to get into this, but I'm going to bring it up. They're voting on a bill that would basically outlaw pretty much every gun out there. So I don't know if it's going to make it through the Senate, but you never know. Joe Manchin's been pretty strong. He's from a gun-loving state. Kristen Sinema, she's from a gun-loving state, so I doubt it's going to make it through. But thank God for Joe Manchin, man, and to a certain extent, Sinema. So let's move on. Let's get to the bond market. Bond yields on the week, very, very weak. We have No new weekly lower low yet, but tomorrow morning, if we get weak economic data, expect lower lows. Now, one chart I have not taken a look at in a while, and it really bears taking a look at, is the yield curve. Wow. We are so inverted. We are so inverted on the yield curve. This is screaming recession. What a disaster area. Incredible. This is so bad. This does not mean stocks can't go up. It's just telling us you're in recession. All right, TLT. Oh, actually, I want to go to the daily chart 10-year yield and point out this is one bearish candlestick, man. I mean, I was doing market wrap last night. I was saying what a bullish chart this was, in that we had a breakout on the 19th, a retest and a reversal bar on the 20th. But man, we got follow through today. So I was right there, but net, reversal bar. We took out the lows. We're at the lows of the week, and we're poised to take out last week's lows. TLT, 20-year bond ETF. This to me looks still like a bear flag setup, but it's flashing reversal bar, daily view. And we broke out today. So yields pressing up higher, yields going lower, all makes sense. Now, this is a good sign for gold. This is our first chart, actually second chart, that really is going to help define where gold may be going. Gold usually trades along with inflation. So do the tips. Both gold and the tips have gone through a mini bear market of late, yet the tip market is flashing a bearish key reversal. We have broken out on Stokes W formation on weekly Stokes. We're breaking out here. Daily view. Beautiful RSI back above 50. It hasn't been above 50 since June the 3rd. Beautiful bullish engulfing bar, one of my top 5 favorite candlesticks. Link below if you're new to technical analysis, 5-part video tutorial on my top 5 favorite candlestick patterns. Stokes rising. We're going up here. As for the US dollar, one trading day left to go. But on the week, we are back down below support from which we broke out last week. So if we close below this support level, that is a bull trap, also known as a breakout point failure. Very, very bearish. And in all probability, we are going to go lower. Why is the dollar weakening up besides weakness in the U.S. economy? Well, look no further. The euro popping up higher. The yen popping up higher. These are the two major currencies against the U.S. dollar in the dollar-Dixie basket. Both are rallying with the U.S. dollar declining because we are no longer the only major economy that is raising interest rates. Now the Eurozone is. So we are no longer unique in that respect. Now we're looking for the Federal Reserve to maybe raise rates one more time, and then they're going to have to start cutting or at least pause. The VIX, a big breakdown on the week, one trading day left to go. We can't draw conclusions yet, but it doesn't look good. So that's bullish for equities. Daily chart, we broke down below another support level today. So the VIX is very weak. Stokes are oversold, but they could stay oversold. RSI is very weak, but we know it's popping up in the after hours. We'll see how we open up tomorrow. More importantly, how do we close? Dow Transports, thus far in the week, we have a breakout. RSI told us a week ago we were probably going to break out this week. Price is confirming it. Volume will probably roll in about average. Thank you, Franklin. Please hit the like button, folks. I beg of you. Beg of you. Rick Roofing, hey, brother. Living the dream here. Living the absolute dream. Let's go to the daily chart of the transports. See the quality. Oops. See the quality of the close. Good close. So all down days are not made equal, right? So why am I bullish on this chart? It's down. Volume rose. I don't like the volume. I'll admit that. That I don't like. But we did rally off the lows. You could tell with the volume like this, and we only closed down a little over a third of a percentage point. What does that mean? It means that you had a ton of tug of war between bulls and bears, lots of indecision. But who won really? Who really won with the bulls? Let me explain. We broke out July the 19th, follow through 20th. Today, we pulled back, retested support. It held. That's why I think the bulls won on big down volume. Let's take a look at the intraday chart if we can get that. I don't know if we can. Oh, this is new. We can. Looks like the Dow transports want to move up higher. Look at this candlestick into the close. Look at the volume into the close. This is why I always say it's not about the first hour of trade. It's not about lunchtime. It's always about the final hour of trade. Always. That's when institutions go to work. The Dow Jones Industrial Average weekly chart, a breakout, bullish key reversal bar. RSI is already broken out. Stokes hooking up. So at current, with this snapshot in time, Dow Jones looking very good. MACD's probably going to go positive next week. Daily view. Big outside reversal bar today. Bullish key reversal. Everything you like, everything you want to see. Problem is there was no volume. That's a problem. Let's memorialize this because we cannot have a sustainable rally with declining up volume, not with all the overhead supply that we have in this market. There are a lot of dead bodies above, and all they want is out. They're not looking to make a profit. They're just looking for that Dow stock that they bought. They thought it was a value, but it was actually a value trap and got clubbed over the head like a baby seal. They just want their money back. So you need rising up volume to keep this rally going. I like the candlesticks. I love the indicators. I hate the volume. Eventually, volume comes back to haunt you. S&P 500 weekly chart. Big breakout. We have a higher low. Now we have a higher high. This is what we've been looking for. We also, if we extrapolate down what was the upper band of resistance, this is going to bust my chops. Oh, it didn't. Good. Let me grab it. Good. Let's expand that down. So here is our upper band of resistance in blue. Should now act as support. What I'm looking for here is if we do in fact break out this week and we close above that upper band in blue, which was currently should be support, I'm looking for a retest next week or the following week, just like we got on the daily chart of the Dow transports today. So we could get a continuation move up higher. To your question, Yoga Mac, 399, yeah, that makes sense. I think 410 is in all probability a stronger resistance level. And I already have it highlighted here, up here. Volume on the week is going to roll in very light. Let's go to the daily chart. Indicators, momentum indicators look great. Price action, great. Volume, horrible. Absolutely horrible. So this to me, you're going into, we're breaking out on a weekly time frame. The chart looks awesome. Looks awesome. But as we near resistance, folks, this is what bear market lower highs look like. It looks great going up. They're ruthless to the upside, and then you hit resistance, and all that light volume, it just drops off, and all of a sudden the sellers move in, and you have no buyers out there to buy shares and support the market. That's why you break down to new lower lows. So I think that ultimately that's what's going to happen here, unless, of course, the Federal Reserve reverses their course and starts printing more money. And in all probability, that's what's going to happen. Trip Qs, a beautiful week, major breakout here. Indicators look rock solid. Volume horrible. MACD has gone positive. Daily chart. We're at resistance. More serious resistance is going to be right up here at around 314. Market may pull back mini dip Friday, probably. Watch out for the economic data. If it comes in light or weak, we may get a rally. Going to probably be a lot of sellers grabbing profits before the weekend. Quite possibly, yes. You bet, Yoga Mac. Yes, sir. Yep. Okay. Let's continue on. I did the daily chart. Yes, I did. The banks. Loving the banks here. Banks, beautiful breakout. Horrible, horrible volume. Daily view. Wrong chart. Daily view. Beautiful price action. We broke out here on the 19th, retested yesterday, today, then a follow-through rally after the morning sell-off. Banks, very, very bullish on the banks. Technology at resistance. We may have a breakout here on a weekly chart. Horrible volume. Horrible volume. MACD has gone positive. See if we close there. Semis. Beautiful breakout on the week. What are we up? 8% on the week. Massive move. Daily chart. We're going to get a pullback here. Stokes are very, very extended. I'm not saying we're done going up, but we're going to pause here in the next day or so. A little bit of a retracement. I think that's a healthy thing. We'll see whether or not we can get another move up higher. Volume is light. Biotechs, of which we are long. $10 on LABU is resistance. I think we're going to ultimately break through it. Consumer staples, weak on the week. Say that 5 times fast. Stokes looking like they want to roll over. Volume to the downside, light. How did they close today? Not horrible, but I wouldn't buy them yet. I would buy them on a breakout above 73.55. Discretionaries continue to move up higher. George Gammon, you can go to his channel on YouTube. Just type in George Gammon, Gamnon. Really good guy if you don't know him. He did some analysis on the stimmy check money, how much is left out in checking accounts. He cited data from JP Morgan Chase, and there's a lot of money still left in stimmy accounts, in stimmy money left in the checking accounts of middle income to low income earners. So the pressure on inflation is still going to be up there. He's forecasting disinflation Q4 to Q1 of 2023. I think it's going to be sooner because energy prices are coming in. But George is a smart guy. I'll partially agree with him, but I like the data that he provided. You can go to his channel. Great guy, George Gammon again. And I think they put the video out yesterday or the day before. Let's take a look at a daily chart here. Extended relative to the third standard deviation Bollinger Band. Volume rising, which is great, but well below the moving average. I smell a trap. Bitcoin, of which we are long. We have been dollar cost averaging into Bitcoin. Very small amount. Very small amount. We're up on the week, over 10.5%. What are we doing now? It's trading with risk assets, and it is down on the session. Emerging markets, folks, it's going to be time very, very soon for us to put our long trade on emerging markets on. We've been waiting for a support level to get hit on emerging markets or a breakout to occur. It looks like we're going to get the breakout, but that has to come in conjunction with a breakdown on the US dollar. We're very close to it. Euro, yen moving up higher, dollar moving lower, and emerging markets moving up higher on the week. They usually trade inversely of the US dollar. I think that the money is going to be made in emerging markets in the coming years, not US equity markets. Emerging markets are cheap relative to US equity markets. That's why we want to be there. We have a weekly breakout on RSI. I'm going to highlight this, and I'm going to come back to this in current future weeks. And we're going to point this out, how to ignore these breakouts. You do so at your own peril. We have been very, very patient with this for a while now, waiting for our opportunity. Let's say 20th or 21st? 21st. TrendSpider is so much easier. 35% discount code below. There we go. Okay. Let's memorialize. Look at the W formation forming on Stokes like a coiled spring. I'm loving this. Volume light. Look at this. Double top on 80X red. Lower highs, lower lows now. The inverse is true of RSI green. MACD is positive, has been positive for the past couple of weeks. This is a setup. These are those setups I like to talk about in the early stages, just like we did with natural gas, just like we did with coffee, just like we did with the DBA. Loving this setup. I would like to see a positive close on the month. EDC looking very good. Members, we may be long as soon as tomorrow. Oil down. We're back down below $100 a share. $100 per share now became resistance. Let's go to the daily view. We're going lower. Oil's going lower. This is so bullish for equities, I can't tell you. And again, to repeat, why is a pullback in oil bullish for equities? It takes the pressure off of the Federal Reserve. CPI data that coming out in August for the month of July is going to be lower on the headline and at the core. Why? Energy prices have come in. Oh, I wanted to bring up natural gas. Natural gas is still strong, but we may be petering out here. Yeah, volume is dropping off. I mean, this looks to me like a short covering rally, and we may be double topping out here on nat gas, at least for the short term. I don't think it's done going up longer term, but nat gas is probably going to come under pressure very, very soon. Gasoline weekly chart down 1.84, and on the month we're down 15, nearly 15.25%, folks. So remember, that CPI report comes out next month. It's going to be lower. It should be lower. So that takes a lot of pressure off the Federal Reserve. And then they could go back to their shenanigans. They're already pulling their shenanigans on the Federal Reserve's balance sheet, which it went up again this week. It's supposed to be declining. It's not. Gold. We'll leave it off with gold. What time we got? Wow, we're running out of time. Gold is up on the week. I think I'm calling a bottom here on gold. 1,700 must hold. I think we've seen the bottom here. Outside reversal, our bullish key reversal bar on the day. As long as the dollar goes lower, let's do a couple of chart requests, and then I got to log off. Okay, we did snap. I think there's a chart for total crypto market cap, a good indicator. If you get it, please share it. Caden Durr, will snap recover? Good long term. I'm not a fundamental guy. I tell you my strengths. I tell you my weaknesses. My weaknesses are I'm not a fundamental guy. I have no idea what their business is, and if it's scalable, if it's sustainable. I think that most of these social media stocks are fads. Think about it this way. 10 years ago, Facebook was everything to everyone. My daughter was forced by her college to open up a Facebook account. She now rarely uses Instagram, which she used to use. She now uses Snapchat, last I heard. But when the next generation comes in, since she's on Snapchat, it's no longer cool. It's going to be woo-woo or whatever social media platform is going to be out there. I don't think that these companies have longer-term legs. That's why Facebook changed its name and its symbol to Meta. They know the days of growth at Facebook are in the rearview mirror. Instagram is probably going to see slowing as well. So from that perspective, I can't help you. I can tell you on the charts when I think there's going to be a counter trend rally off of an oversold condition. I can tell you after a long bear market, when that bear market is over and we're beginning to move out of that bear market and up and into a new bull run using technical analysis. But other than that, it's really a leap of faith to think that Snapchat is going to return to its all-time highs. I think that's not going to happen. It's just, I don't think it's going to happen, and not unless they evolve into something else like Facebook's trying to do. So that's my take, and for what it's worth. Okay, I think somebody had Amazon in here. I had to keep it very limited tonight, guys. Neo, we'll do Neo. I got to go to my members area, see if my members were asking for anything. I should have been ready for this, guy. Sorry about that. All right. No, nothing there. But I did have to go back to those watching this on the replay. If you got this far, if you want to leave your symbols in the comments below, if you're bullish and bearish and why's behind it, then I'll go over your symbols live on Sunday Night Futures Live. Now, there was a gentleman that left. I did get back to him, so I want to follow through. He asked for Tesla. I did Tesla for him. AFRM and Cliff. Firm holdings looking very good weekly time frame. We have a weekly breakout. I love the Stokes here. Higher lows. Now we have higher highs. Here is your upper band of resistance, which is now in the rearview mirror. Your resistance level is going to be up here at around 53 bucks a share. We closed out the session at 29.75. So the weekly chart looks awesome. Very, very bullish. Daily view. We're extended relative to the third standard deviation Bollinger Band. I think you need a pullback here. And then by the pullback, ideally at this VWAP, volume weighted moving average, you can see I have it anchored to the highs of the session on July the 1st. And you can set an alert on the VWAP. Note to myself, this chart's looking good. So our alert is set using the VWAP on a firm. His other request was CLF. Let's go to the weekly chart first. Cleveland Cliffs, beautiful week. Stokes hooking up. We're right at resistance. I can't condone a buy here until we break out and above $17.27. Let's go to the daily chart. And there it is on a daily time frame. I would not be a buyer here. You need to buy a higher low, maybe at a retest of this pivot point. What am I doing wrong here? Right at was the high, $16.17. That's Cleveland Cliffs. Wait for that pullback. I would not buy it here. Weekly resistance above. Neo. It's freezing up on me. Chrome better get its act together. Okay, Neo. So we rallied up and into a resistance level. I would be a buyer on a close above. We have a volume shelf right here. Perfect. Right at $22.54. I think the shares are probably going to move up higher. I'm not going to buy the stock because it's a Chinese stock and I don't buy Chinese stocks. I don't like to have the Communist Party as my partner. They just find Didi $1 billion. The daily chart, lots of resistance here. You got to wait for the breakout. Don't buy on hope. Buy on the breakout. Where'd you guys go? Here you are. All right. BA. We're going to go over Rick Roofing wants U.S. Steel and Boeing for Rick Roofing and Steel as well. So we're going to go over both and we'll call it a night. Boeing, nice breakout here. Really, really nice breakout. But that's a daily chart. We've broken out on a weekly chart as well. We have some resistance levels above. What is this? The 20-period moving average. I think you can get a better price here on Boeing. That 20-period moving average, usually what happens, you make a run after a big sell-off up and into the 20-period, then the 50-period moving average. You rally strong, and then you stall at those moving averages. You pull back, and then you get another running start as the moving average flattens out, and you break out above it. So I think you can get a better price here. I would look for a shakeout in the market. Volume has been declining. I would wait for this. We have not had a retest of the breakout point. So we're going to keep a little bit of sensitivity on. Now, this support level is rising. So at current, it's at about 153.5, but it's rising. So that number is going to change. U.S. Steel. Steel's looking good. Commodities beginning to come back to life here. Monthly chart, we are up nearly 15%. Weekly chart, we have a breakout. I had an alert set up here too. This fired off. I didn't see it. We have a breakout on a weekly time frame. Now, keep in mind, same thing holds true for this stock as it does with every other chart we've gone over tonight. There's a lot of dead bodies above, and this was a brutal, brutal, brutal sell-off. So there's no rush to chase these stocks. They're going to hit resistance levels. The people that bought at those resistance levels, they want to get made whole. They're not looking to make money. They've lived through a nightmare. They've seen a red entry on their trading platform turn green. They're out. So no rush here. Do we have resistance above? Yeah, we do. 21 and a half is resistance. You could even argue lower. Down here, 2041. Where did we close today? We closed at 24.36. So you can't buy this stock right now. After it's had a great run. I'm not saying it's not going to move up higher, but now it's time to digest these gains. And these are big, big gains. So we need to see a retrace. Now it's U.S. Steel. It's very, very volatile. I'd like to see a retrace back down to 1913. We'll keep some sensitivity on, not too much. And we are good to go. You're welcome, Rick. Thank you for the comment. Appreciate it very, very much. You rock too, man. All of you folks rock. I appreciate you all being here. If you could please smash the like button, subscribe, share with a friend. And for those folks watching on the replay, leave a comment below. Tell me your symbol that you like, why you like it. You're bullish, you're bearish. Tell me what you like or dislike about it. We'll talk about it on Sunday night Futures Live. We go live 6 p.m. Eastern Standard Time every Thursday and Sunday. Everybody have a profitable trading day tomorrow. Have an awesome weekend. You earned it. Thank you again for being here, and I will talk to you soon. Be well.